Hello and welcome to the Accounting Analytics channel. The recording process in accounting can be summarized in 3 steps. In step 1, we have to analyze the transaction, meaning we determine the effect of each transaction on the accounting equation. In step 2, we record the transaction in a journal entry. In the third step, we transfer the journal information to the appropriate accounts in the ledger. I will begin this video by presenting important definitions, then we will work on 3 step-by-step examples that will demonstrate the recording process. So buckle up and let's begin.
The journal is a record of all transactions a business conducts in a chronological order. Journal entries use debits and credits to show how each account is affected by a transaction. The process of entering transaction data in the journal is known as journalizing, and a journal entry looks something like this. It shows the date, the debit account title and the amount, the credit account title and its amount, and an explanation for the transaction.
By the way guys, I have made a full video on debits and credits with nice visualizations that will help you to grasp this topic. So make sure to check it out.
Consider the following journal entries recorded by a company on June 17th. Let's say the company wants to know the cash balance by the end of the day. Following the debits and credits for the cash item line by line is tedious work, especially when hundreds of journal entries take place every single day.
And here's where the ledger comes to the rescue.
Luca Pacioli introduced the double entry bookkeeping in 1497, and since then, companies and banks began using ledgers as a record for their financial activities. The accounting process today is computerized. The time needed and the error margin are dramatically reduced, but the core concepts are relatively the same. You can think of the ledger as a book containing the entire group of accounts maintained by a company. It shows the balance in each account and keeps track of changes in these balances. It got assets accounts, liabilities accounts, and equity accounts. In this video, we will use the T account form. Called T account because it resembles the letter T. It got a title, a left or debit side, a right or a credit side, an opening balance, and the ending balance. In real world, most companies use the standard form or the 3-column account. It shows the debit on the left, the credit on the right, the balance after each transaction, and other details such as the account number, the date, an explanation, and a reference to the journal entry. In this video, we will stick to the T account because it's simple and easy to work with.
Now, the process of transferring accounting information from the journal to the ledger is called posting. We will work on 3 examples, so make sure you follow along and you will realize how easy it is.
On June 1st, 2023, Mr. Beast invested $100,000 in a video production company called Beast Productions. So Mr. Beast invested money in the startup, thus a company's cash balances increased $100K and owner's capital, part of equity, increased by $100K. Now we do the equation analysis. This step is very important because it helps us in verifying the correctness of our basic analysis by checking that the left side and the right side of the accounting equation are equal, and also helps us in determining what to debit and what to credit. So we put plus 100 under assets, plus 100 under equity, the equation is in balance and we're good to go. We know that assets increase with debit and decrease with the credit. As for the right side, liabilities and equity, they behave in the opposite fashion. They increase with a credit and decrease with debit. Here we want to increase cash, and cash is part of assets, so we debit cash. We want to increase owner's capital, which is part of equity, so we credit owner's capital by 100,000. As for the last step, the posting, we go to the ledger, and the T accounts of the accounts that appeared in the journal entry. The debit goes to the left, in the journal entry we debited cash, and the credit goes to the right. The second transaction. On June 7th, 2023, Beast Productions purchased filming supplies on account for $33,000 from B&H store. Beast Productions got new assets, so the supplies asset increased $33,000. Payment was on account and not in cash, so accounts payable increased $33,000. We look at the equation and verify that the equation is in balance. The left and right sides are equal. We want to increase an asset account, so we debit supplies. We want to increase a liability account, so we credit accounts payable. In the ledger, we post the entries in the appropriate accounts as we did previously. The third transaction. On June 30th, 2023, Beast Productions paid the amount owed to B&H store in cash. Here, a cash payment has been made, and we no longer owe money to B&H, so cash and accounts payable decreased by $33,000. We debit accounts payable and credit cash. In the last step, we update the accounts payable and cash T accounts with the recent journal entries. Now, if we want to determine the balance or the ending balance in a T account, we compare the left and the right side. The ending balance will go on the larger side, here the debit side. We subtract the smaller number from the larger, or 100,000 minus 33,000, and we get an ending balance of 67,000. And that's it, guys. Thank you for watching. If you have any questions or comments, write them down in the comments below. I will also share with you extra practice problems. You can find the links in the description of the video. If you like the content and would like to view more accounting and finance videos, please make sure to subscribe to the channel, and see you in the next video.